As we are now in 2024, millions of Canadians with mortgages are going to be approaching mortgage renewal. This infamous mortgage renewal cliff that is looming for millions of Canadians in 2024 or early 2025, as around 3 million Canadians are anticipated to hit their mortgage renewal or maturity dates. Now, obviously, that depends on whether or not they're going to ride out their mortgage to maturity. Maybe they're going to refinance, restructure, sell their home prior to that. In this week's episode, we want to take an opportunity to go through some of the different conversation points, some of the pitfalls, some of the things that you should avoid with your mortgage renewal in order to ensure that you get not only the best options, the best products, and the best rates, but to ensure that you plan ahead and accordingly and help keep thousands of dollars in your pocket. So, welcome back. It's Friday, Finance Fridays, and I'm your host, Anthony, with InTouch Mortgage Solutions, and we welcome you back to the channel. If you haven't had a chance to subscribe, please feel free to do so. Smash the like button. Don't forget to leave a comment in the comment section below, and don't forget to share this video with a friend if you know someone that is approaching mortgage renewal in the near future. So first and foremost, as we've now entered 2024, millions of Canadians with mortgages are going to be getting what's called an annual mortgage statement, which is basically issued by your lender either electronically or by mail. And you can check with your lender either through your online banking profile or if that lender has a online presence to find out exactly what your current balance is as we ended off 2023. And more importantly, what interest and principal was paid to that mortgage. Obviously, the rate and all that detail will be in that annual mortgage statement. But the most important thing is, if you don't know your mortgage maturity date, is to find out on your annual mortgage statement. This document will obviously provide you with that date. And it's important to really diarize that date for yourself and your family to make sure that you don't wait to the last minute to start to figure out what you should be doing once you approach mortgage renewal. So our first piece of advice is obviously when you get that annual mortgage statement, diarize your conversation with either your lender or a mortgage professional at least 3 to 6 months before that mortgage comes up for maturity. Many lenders may be sending out notices, early renewal notices, or mortgage maturity letters to their clients, and it's important to understand the distinction. We had a client that reached out to us and they had basically got an early renewal statement in the mail, and it was from one of our alternate lenders. And the client reached out and says, Anthony, my mortgage is coming up for renewal. I'm like, that's strange. I think it's coming up in a few more months. I'm like, can you please send us the copy of it? And obviously it was an early renewal notice, right? And the lenders wanted the client to renew early on, about 3 months before their mortgage was actually going to hit maturity. And looking at the existing rate that the client had as opposed to the rates that were being offered, while we're able to provide the solutions, the biggest advice was, let's diarize this to approach it closer to the maturity date, because the interest rate that they had on their existing mortgage was significantly lower than the rates that are being offered today. And both the client and I, discussed their situation, saying, look, we believe that interest rates potentially could be coming down in the near future, at least a couple of basis points by the time that your mortgage will actually hit maturity. In an effort to avoid any mistakes, we said, let's try to negotiate the rate. We locked in a new rate with a different lender, substantially lower than what the client was offered. And we basically kept that opportunity open for them so that we've hedged the bet, making sure that the client is covered from all angles. But we've definitely heard through the pipeline, through other industry professionals, that a lot of clients may get confused when they see this early renewal notice and think that they have to sign back. And because the deadline is usually not that long, they just sign back and not really thinking too much about it. And this leaves the client exposed and thousands of dollars that could be potentially lost. So having a conversation when you get a mortgage renewal statement or notice in the mail is very, very important. Reach out if you have questions. Obviously, speak to the lender. If you have additional questions, you want to find out your options, speak to a mortgage professional to see if there's different options. A lot of clients may be eligible to switch to a different lender at a significantly better rate. So there's many different reasons why this mortgage renewal opportunity can keep thousands of dollars in your pockets, especially when you're looking at the options. Now, there is a major difference between, looking at a refinance versus a renewal. A lot of times we're talking to clients and they'll say, Anth, I got my renewal notice. I want to get the renewal. This is what the bank's offering me, but I want to pull out extra money. I want to get a line of credit. And, sometimes you'll look at the lender and say, well, that lender doesn't offer a line of credit. You may have to move to a different lender. So understanding those options, some clients may have debts that they've accumulated over the past little while and they want to pay that off. So it doesn't mean it's a renewal, right? A renewal, it means that you're taking the existing mortgage balance and either you're renewing with the existing lender, you're just signing back, basically saying, hey, we accept the terms and conditions that you're providing, and we sign it back. Now, some clients, as a caveat, may need to exercise this option, especially if maybe they've lost their job, their financial situation has changed, and they can't requalify to move to a different lender. The existing lender does not require them to provide proof of income or any difference in their particular situation. So maybe looking at a renewal may fit their bill. Obviously, looking at the interest rate, sometimes clients will say, look, I want to move to a different lender. We have different rates available and we can switch it over. But when you switch over to a different lender, which we call a switch transfer to a different lender with the same existing mortgage amount, well, you still have to now potentially look at the income and the qualification components of it, right? Unless it's an insured mortgage. If you bought the home years ago and you paid the mortgage default insurance through either CMHC, Canadian Mortgage and Housing Corporation, Sagan, or Canada Guarantee, well, then you definitely do not have to undergo the stress test. But if you had a conventional mortgage, the banks will requalify you at the current rates under the current guidelines. And this is something that we've talked about and we'll continue to talk about in 2024, but there is a difference. Now, if you're looking at refinancing, means pulling out money from the mortgage, that means that different rates can apply because you're not just transferring that mortgage over. The lender on the other end may not be able to put mortgage default insurance on it themselves. There's many different components, depends on the amortization. Some clients may say, look, I want to re-extend my amortization back up to 30 years to bring my payments a little bit lower. I may want to pay out some debts. At that point, it constitutes a refinance. So you have to understand a renewal, existing balance, maybe switching, staying with the same lender, no changes to the mortgage. A refinance is taking that existing mortgage, adding a little bit more, pulling out some equity from the home, re-registering that mortgage at a different amount. These are two different components, and difference in obviously rates and the application process are applicable. So looking at all that, why would someone want to maybe refinance or switch different lenders? Multiple reasons why this could happen. Many Canadians who may have a mortgage with a lender that doesn't offer them a line of credit, or maybe they have a line of credit and they've incurred some debt on that line of credit and are saying, hey, maybe I want to consolidate that line of credit into one simplified payment. These are some of the conversation points that we're having with our clients today. So obviously a lot of things to consider. If you have questions about it, always feel free to reach out to our team here at InTouch Mortgage Solutions or speak to your mortgage professional or lender about the options that are available. Also keeping in mind that, as I said, sometimes lenders in this current environment, and we're not saying that all lenders are doing this, but what we found is definitely the lenders that are issuing that mortgage renewal to their clients, they may not be as aggressive as another lender in the mortgage space that we have access to who wants to earn their business and that market share. So you might find an opportunity to switch over to a different lender at a significantly lower rate, and you won't really know that unless you're speaking to a lender, another lender, not the existing lender that you're with, but obviously having a chat with a mortgage professional or a different lender about what they're willing to offer you to switch over or refinance that mortgage. So with all that being said, what are some of the things that you should be avoiding or some of the traps that you should be paying attention to? Number one is never accept the offer that is being given to you by your lender when you hit mortgage renewal, because obviously that is the first offer that they're giving you, and they're anticipating that many Canadians in this environment are going to sign back. They're not going to ask questions. Maybe, as I mentioned earlier, their financial situation has changed and they're worried that they can't qualify, so they want to make sure that they can lock in a mortgage. But before you sign that piece of paper, make sure you shop around, make sure you've spoken to, I should say, a mortgage professional, a different lender, and done your homework. Number two is not reviewing the terms and conditions in that mortgage renewal. Now, sometimes lenders change or revise their documentation, their actual commitment to their clients. So you need to pay close attention to what you are signing. Now, obviously for many Canadians, these documents are drafted up for only lawyers to basically understand. So if you have questions about it, don't hesitate to reach out to your lender. Understand what your bona fide sales clauses are, if there are any, meaning that the only way to get out of that mortgage is if you sell the home, you can't refinance that mortgage. Let's say you lock in for a new term of 1 to 5 years. What are your options within that particular time frame? So understanding what that contract is laying out, because you are now signing a new contract. You went from being a free agent, so to speak, a particularly open product. Once that mortgage hits renewal, you have the opportunity to switch to a different lender. Once you re-sign, now you're in the bank's books, and now you may have to pay a penalty to get out of that mortgage. And this is where it comes down to really paying attention to what you plan in the next few years. Obviously, very difficult to look at the options. What does your job security look like? Are you planning on starting a family? Are you having an additional addition to the family? Are you planning on moving? How is your financial situation looking like? Do you have reserves? Do you have adequate funds to back you up in the event of job loss? So many things that you should be considering, and writing them down obviously is a good piece of advice. Number three is ignoring your credit score. For a lot of Canadians who are approaching mortgage renewal, sometimes things happen in life. Obviously, we've went through a major shift in the market, obviously with higher costs to buy goods and services, food, etc., gas. Maybe many Canadians have racked up some debt in their credit cards. Maybe they have some lines of credits. Maybe they've missed a few payments. Something has happened. Now, when banks generally go to pull their mortgage renewal, right, they will pull the client's credit score internally. And although we haven't seen many clients, we should say, have not been deselected by their bank. But if the credit is significantly worse, or the client has taken on maybe a second mortgage or something that the bank doesn't like, it is possible that the bank may deselect you as a client, especially if your credit score is extremely weak. Maybe you've gone through a judgment, maybe you've gone through consumer proposal. Something like this can impact your lender's renewal options. Not only will they renew you, but what rate they will renew you at can be dependent on the lender. So be very cautious of that. If you're looking at your mortgage renewal date and it's many months out from now, making sure that your credit is intact. With all the technology today, with most of the major banks offering credit, insights into your credit through TransUnion or Equifax, you can monitor your credit situation to ensure that you're going to get the best rate at renewal. Number four is basically failing to negotiate your mortgage renewal. Let's say you are in a situation right now where you need to renew with your existing lender. Maybe you don't qualify to switch to a different lender, or you do, is always having a conversation with them. Don't just sign back, negotiate with them. Say, look, I want to see if there's something better you can do. Sometimes when that mortgage renewal comes out, it is printed on a date that was maybe a few months ago, a few weeks ago. And with the volatility happening right now with particular interest rates in the bond market, well, that means you might be leaving some money on the table. So never hesitate, especially if you're signing that mortgage renewal back for whatever reason that you choose to work with your existing lender. Don't be shy to ask them if there's anything better they can do, as opposed to, maybe talking to a mortgage professional and seeing if there's other options out there. Now, obviously, you have to understand when you're approaching mortgage renewal, there are costs associated with renewing or switching your mortgage over. Some lenders may cap that cost, which means if there is additional cost, we can add it into the mortgage. You can pay it up front. There are different options. You can renew internally. You don't have to necessarily use a lawyer. If you're refinancing, what are these costs associated, and what is the difference in that rate? Is it a significant amount of difference or savings that's going to offset those particular costs? Sometimes we'll look at particular situations and say, hey, the rate that's being offered by the lender is maybe 20, 25 basis points higher than what we can get you elsewhere. And by the time you start looking at all the costs associated with, the discharge, because every bank, no matter what, has a discharge fee to discharge that mortgage, even if it's approaching mortgage renewal, there is a discharge to basically administer that mortgage and move it to a different lender, and then other costs associated. That is a very intricate topic, and if you have questions about it, make sure to reach out to a mortgage professional and they'll be happy to break that down for you. But don't forget to negotiate whether you're working with a broker on a new deal or you're working with your existing lender. Don't be ashamed or afraid to ask to see what the differences are and what options are available. And the last one, number 5, is overlooking alternative options at mortgage renewal. This one here should go without saying. When you're approaching mortgage renewal, as we've touched on, you are basically a free agent with that particular lender effective that date. You have an option to renew or switch to a different lender. And understanding what that lender provides you or doesn't provide you is very, very important, because you may be looking for another product. Maybe you're now in your forever home and you want a line of credit. You want to look at all those options. Does the lender that you have, the lender you're working with now currently provide you with a line of credit? Are you looking to do some renovations in that house? Are you able to switch over to a different lender? Maybe you're with a private, maybe you're with an equity lender, and you have an opportunity to switch to a different lender, or vice versa. Maybe you're with an A bank, something happened, you need to pull out money, you don't no longer qualify with an A bank, and you need that money out, you have to move over to a B bank. Do not leave this to the last minute. Obviously, look at your financial situation, understand your goals as a family, as an individual, on what you need to do over the next little while. Because once you sign that contract, whether it be for 1, 2, or 3 years, the term, right? That's the term of the mortgage. Maybe even 5 years was very common just a few short years ago. Many Canadians are looking at their options. Many Canadians feel that fixed rate mortgages are going to come down. So obviously, looking at those options, looking at those solutions are very, very important, especially now when you're looking at mortgage renewal. So obviously, what do you think's going to happen in 2024? Are we going to see, fixed rate mortgages come down? Are we going to see the Bank of Canada cut rates? We know already that the US is anticipating potentially 3 rate cuts. How will that impact the Bank of Canada? Will that impact their next rate decision come on January? And obviously, will that move variable rate mortgages down in the near future if they cut? And what's happening with fixed rates? There's a lot to really think about, because many Canadians right now might be coming back to the table talking about wanting to go into a variable rate. And one very important thing to end off the video is, if you're a Canadian looking at their mortgage renewal statement saying, do I go fixed or do I go variable? We'll definitely do another episode on this. But if you're in this transitional period right now, is you have to understand, does the lender that you're working with right now offer you an adjustable rate mortgage, which means when the Bank of Canada policy rate changes, does your rate change with it, or does it stay static with the trigger rate? And those are some important factors, especially if you're looking at a variable rate mortgage. Don't get trapped with a mortgage, especially if you're going for variable because you want to ride the train down and that's what you think is going to happen. Then you want to make sure that you have the right product that will reward your risk once you select that particular product. So that's very, very important to understand. But we'll leave the video here. Wishing everyone a wonderful Friday and an even better weekend ahead. We'll see you next week. Thanks for watching.